Well, all eyes will be on the Australian share market this morning after another volatile day on Wall Street. As we go to air, the Dow Jones is closing, having dropped more than 2.7% after yesterday's plunge, sending shockwaves across global markets. More than $100 billion was wiped from the Australian market yesterday. That's the biggest drop since the pandemic lockdown era.
All this comes as the Reserve Bank meets today to deliberate over just what to do about interest rates. Let's go straight to our reporter Stephanie Ferrier in Melbourne. Steph, good morning. So some pretty big movements on the markets overnight. Bring us up to speed.
Yes, good morning, and we've got the sirens right on cue because there are real concerns about what is going on at the moment in stock markets around the world. Now, we've just heard there that the Dow Jones has closed 2.63 down lower, the Nasdaq down 4.3%. That's after stocks tumbled yesterday as well, and that's also all prompted by a fear of a slowdown in the US economy after those jobs figures came out on Friday. And that, of course, was the official trigger or what is indicative of a recession. So very much looking down the barrel of grim times there. And that has also caused other falls as well. We've seen the Nikkei, for example, yesterday, that plunged 12%. And that is a massive fall there. But what we saw in our own ASX yesterday was it was down 3.7%. Now, that was off the back of those concerns about the US economy. So we're going to be watching very carefully to see what happens there. All stocks, bank stocks as well, were down.
And also, Steph, a big day for so many borrowers around the country.
Yes, so this also, of course, plays into what we're seeing with the Reserve Bank Board, because at 2:30 they are going to be making the announcement on interest rates, whether or not to leave that official cash rate on hold at 4.35%. Now, of course, the biggest concern that they have had has been inflation, and at least what we saw with the June CPI quarter figures coming out just recently, there was a bit of a breather because they came in line with expectations. So just 1% for that quarter, and also we talked about 3.8% inflation for the year. So it is tracking properly to get within the RBA's target band of between 2 to 3%. And now we have the ASX Markets Watch basically predicting an 80% likelihood that they are going to remain on hold. But analysts say that they believe that this is likely to be a very hawkish hold because, of course, they are watching that inflation figure. They don't want to stoke any concerns about that. So they're going to be treading a very similar line to the Bank of Japan. And of course, though, you've got to say that they will be making probably some mention about this recent market volatility, Michael. And what we are going to be looking at as well is what the predictions are for the future beyond this decision this afternoon, because now it is looking more likely that we might see an interest rate cut sooner rather than later in terms of towards the end of the year. That's certainly going to be a huge relief for so many borrowers out there, and of course the flow-on effects to renters as well.